Just do a quick introduction. We've got Philippe Richard, who's the head of international at the Abu Dhabi within Abu Dhabi Global Markets within the Financial Services Regulatory Authority, so the regulator. We've got Eric Pan, who's the president and CEO of ICI Global, which is the prominent large US fund management association. We've got Ingrid Holmes, executive director of the Green Finance Institute, and congratulations to her already, will be the co-chair of the UK Green Technical Advisory Group. So basically, UK's answer to Nathan, who spoke yesterday. We've got Jarek Olszówka, who is the international head of sustainable finance at Nomura, the Japanese investment bank, but also, in addition, for the purpose of today's discussion, speaks on behalf of GFMA, the Global Financial Markets Association, which brings together global financial institutions in capital markets. And last but certainly not least, Tomo Ishikawa, who's the managing director and head of government and regulatory affairs within MUFG. It's interesting because we've got representatives here from the US, from Japan, from Europe, from the Middle East. And I think in Europe, we're looking in from the UK, recognizing Brexit. So that's why Ingrid finds herself on the international panel rather than in the previous discussions. But maybe nonetheless, we start with you, Ingrid, because you've been following these discussions very broadly. I know you've taken a keen interest in the discussions over the last 2 days. How do you see the discussions in the EU and what they kind of tell us about the potential direction of travel in the UK?
So thank you so much for inviting me here today to talk about what the UK is doing, hot on the heels of some brilliant leadership from Europe. So just to tell you a little bit about the UK process. So the UK has asked me to set up what we call a Green Technical Advisory Group to advise the Treasury on the design and implementation of a green taxonomy in the UK. So we're not there designing the actual individual technical screening criteria elements. It's more about how we deploy it, which is not straightforward because although the starting point is the EU taxonomy, we know that there have been some issues around what some would describe as political interference in the work of the technical advisory group. So we saw recommendations changed or omitted as the process evolved through to the publication of the delegated act. So that raises a few concerns in terms of, is what the EU doing completely scientifically rigorous? And then that we have another set of issues which are sort of positive, I think, which are that the UK has recently committed to very ambitious greenhouse gas emission cuts in 2035. So something like a 78% emission reduction target, which means, for example, we're going to need to move very quickly to decarbonize all our buildings. So that means you immediately start to look at a number of sectors from the missing pieces, so agriculture, the energy elements that have been excluded, and also there is an issue around buildings about whether what the EU has done is actually fit for purpose for what the UK is trying to achieve. Now, within our group, we have got, I think, a really good mix of people to try to answer these questions. So we've got taxonomy users themselves, both from the financial services, non-financial services side. One of their concerns is they would like to see clear direction of travel, but also would like to ensure that there isn't an overly onerous reporting burden. But we've also got within our group academics and NGOs who will focus us on keeping the ambition high. Sorry, I can see that you're talking, and I'm wondering if I've gone straight into the content and perhaps should be focusing on shorter remarks for the opening. What's your steer as the chair? So we've got this issue of very ambitious political targets in the UK, but clearly a lot of our companies that will be using this taxonomy, both on the financial, non-financial side, they may be based in the UK and then needing to report against this regime. But if they're international, they may be dealing with the EU taxonomy and other taxonomies in the US and so on that might be emerging. So we do need to be really cognizant of those issues. So just related to that, I think one of our early questions that we need to answer is, how do we provide maximum certainty to the market at a time when the pace needs to move quite quickly? So just to give you a sense of that, although the group's work is envisaged to last for more than 2 years, we've actually got a legal requirement to have a taxonomy in place by the 1st of January 2023. So some of those early questions are, do we just adopt the EU's taxonomy and then go through a review process, or do we review and then adopt? That's one question. Another piece I'd put on the table is, we are fortunate in the UK that having only recently exited the EU, we've onshored almost all the EU regulation that will be needed to underpin this taxonomy. And that won't be the case for other jurisdictions looking to take a lead from Europe. So just to sum up, the remit for the group is an expectation around using the EU as a basis. We do have some concerns around these changes that were introduced as a result of the political process this year. I think there may well be divergence in the UK, but the good news is the ambition should be up. And so I think as a technical group, we absolutely want to avoid market fragmentation. And our question is, can we adopt some of the common methodologies set out in the EU taxonomy, but maybe set higher thresholds for compliance? Good news is political support for this is high. And actually this morning, our Chancellor Rishi Sunak talked about British high values on environment informing an international dialogue on what more we can all be doing. So I think reasons to be hopeful there, and I'll leave it there for the moment.
No, then I was very happy that I gave you a few extra minutes to set that out, because a number of the things we want to come back to, which is kind of the screening criteria, so the actual thresholds and how they're, so the tension between having an underlying methodology that's consistent, but let's say different levels of ambition or specificities depending on your economy, the point around politicization, but also kind of just how do we make it internationally compatible. I think very important points. I think, Eric, maybe I pass over to you from the US side, so to speak. It's more of a departure suddenly to have sustainable finance being discussed from the US side in this kind of context that we're in now, i.e. after the change of the administration.
Well, definitely. I mean, if we were to have this conversation a year ago, it'd be a very different conversation. The United States, with the Biden administration, has gone all in on sustainable finance. But I think everybody listening today knows quite well, even though one can now say that there's a commonality in objective between Europe, the UK, and the US, there's still very big differences in how they want to take that forward. And in thinking about the topic of this event and what Ingrid just said about taxonomies, I think the most striking observation from an American perspective is taxonomies is not something that the United States has really talked about. It's not something which the US government, any government agency, has really begun doing work on. And it's not something which I would say the private sector here in the United States has called for in the US. And this is pretty stunning, given the fact that for all of us who work with companies that have global businesses, the fact that there's a taxonomy coming in through the EU, there's obviously this new taxonomy, perhaps even better and more improved taxonomy coming from the UK. Clearly, we're heading toward a direction where we're going to have some jurisdictional issues. And I think Ingrid's absolutely right. I just want to echo some of the things she said, but to emphasize the compliance burden, right? I think in the case of the buy side, many of our members who are large asset management firms who obviously do business in the EU, in the UK, in the United States, as well as in Japan and other jurisdictions, they want to be able to comply with these new requirements, but they are struggling in figuring out how they can abide fully with what is required of them in the EU, while also making sure that they follow what's required in the US and other places. Now, if there's time, I could talk a little bit more about what the US is doing, but focusing narrowly on the topic of taxonomy, I think this is going to be one of those difficult conversations. And I think quite recently this week here, by video, but the US government in dialogue with the European Council, this was even a topic of conversation about the differences between the EU approach and the US approach.
Thank you, Eric. Yes, we will come back to maybe what the US is doing, because as you say, we were reaching a difficult position of can we reach what equivalence, recognition, whatever you want to call it. Let's not look at the legal instrument, but something that works with one another. And maybe actually, Jarek, I could come to you, because I know the GFMA has done a bit of work around this question of convergence, divergence of taxonomies, or in the case of Eric, not started thinking about it formally yet at all.
Yeah, sure. And thank you very much for having me at very interesting taxonomy workshops, very interesting today's. But so considering the topic of our panel and the international dimension, as Nicholas, as you mentioned, that I'm somewhat representing the GFMA, I thought it would be worth highlighting a very recent piece just released in June, a set of global guiding principles for developing climate finance taxonomy. So this was created by the GFMA, so very, I'd say, cross section of the entire financial industry, and together with Boston Consulting Group and under GFMA chairmanship of Steve Ashley, who heads R, meaning Nomura's wholesale division. So the guiding principles, they contain that we've recommended 5 key principles to consider when developing either regional or sectoral climate finance taxonomies. And just to be clear, what we are not trying to define any thresholds or get bogged down or specify what it should or should not count as eligible as a sustainable activity. This is more at the meta level, trying to say what are the best practices and how to create these taxonomies globally, considering there will be variation across regions. There'll be different transition pathways specified. So the key recommendation is from us is that climate finance taxonomies, firstly, they should be broadened much wider than be based on use of proceeds to capture entity level and all eligible sources of capital. So it's quite an interesting one that when you think, to put in perspective, I guess for the audience, for climate finance markets, we really need to scale up, and to give an idea of the challenge ahead of us, by various estimates, we need by 2050 from US $100 to $150 trillion, and I know it's a very wide range, but this means that annually we need anywhere between 3 to 5 trillion per year in global investments to decarbonize the global economy. And out of this, again, we all the discussions have been so far centered on the EU, and rightly so, highlighting EU's great leadership in this area. But we really need to get other regions involved. So, for example, Asia, out of this 100 to 150 trillion, around 70 trillion is required just in Asia alone, not to mention, Eric talking about on behalf of the Americas, looking at the other regions outside Europe. And also if we look, say, at green bond issuance, we all know it's been a record year last year, but again, to give a figure, it's only been 300 billion that has been issued last year. And cumulatively, the whole green bond market passed 1 trillion mark from the beginning of the existence of this product. And even if we take all ESG debt taken together, so including both loans and bonds, and even including the rapidly growing social label, that just gets us to, in total ever issued, USD 2 trillion. And putting it into context of 150 trillion clearly shows how that fixed income instruments alone will not get us there. So with the GFMA together with BCG, we ran approximate calculations, and bonds will likely just deliver 20% of what is needed. Loans, higher proportion, 44%. And then there's a huge area of green equity investments, which accounts for probably 35% of what's needed. So the recommendation is that as much as we need to define categories, what's eligible, and in terms of use of proceeds categories, we need to look at entity level and all sources of capital. So mobilizing equity financing, working capital that is not so easily linked to specific economic activities. And then the other key recommendation is that the taxonomies need to be objective in nature and supported by clearly defined metrics, thresholds which are science-based, aligned with Paris Agreement. And again, this may sound very obvious and hard to find someone who would say they don't agree with science-based targets, but then if you look, for example, at the EU and the very heavy pressure that the European Commission has come under during the consultation process last December, well, in respect of the first two EU delegated acts on climate mitigation adaptation, we have seen the risk that can arise when there's a genuine risk of departure from science-based targets. And also another principle which we recommend, and I think we'll get into this further down in our discussions today, is to have a consistent set of principles and definitions. So we believe that there should be flexibility for regional or temporal variation, as there's clearly differences in transition pathways, especially when we look outside of the EU, not even between member states. But we really need some kind of comparability to make all these taxonomies, which we already see emerging, and I'm sure we'll get to cover what's happening in Canada, Australia, Japan, and elsewhere. So I've spoken for a good while now, Nicholas. So maybe I'll hand it over back to you, and I'll provide more comments during our discussions.
No, thank you very much, though, for setting the macroeconomic perspective just of the level of the challenge of what we're facing. I think, Tomo, maybe I can pass over to you on the Japanese perspective, to your view on kind of or the Japanese industry's views on what Europe is doing and what Japan might emulate or where it might diverge, how you view it at the moment. Because my understanding is the reliance has been in Japan much more on disclosure for now, based on TCFD and other standards, than on the development of taxonomies.
Sure, thank you. Let me maybe start by sharing with you what has been the reaction of Japan Inc., if I may say that way, of the EU taxonomy. To be blunt with you, not me personally, I've been following the EU legislation quite closely, but I guess in general, Japan or Japan Inc.'s reaction to the EU taxonomy has been neutral, somewhat negative, if I may say that way. There are several issues, including communication issues for this reaction. 3 reasons. First of all, I think maybe it's a perception issue. So when we were told that taxonomy is a regulation, it's a law, they will say, oh, it's a law. Maybe it's the same thing in the US, right? Eric can tell you a bit more. But when we were told it's a law, then we'll say, oh, okay, so there's got to be a clear line. If we violate, there may be some enforcement. So it's not just a guideline, it's a law, it's a regulation that we have to abide by. So it's not just something very soft that would be nice to have, but it's a law. And at least in Japan, when we were told, at least banks like ourselves, when we were told it's a law, then we'll say, okay, we should never violate. So maybe that was such a strong message that when we're told taxonomy, you have to abide by. If not, you're illegal. What are we going to do about it? So that may be one communication issue. So Japan Inc. took it as a kind of a very strong message that if you violate, you're in trouble. So that's number one. Number two, I think, and I'm sure, this came up several times, with the recognition of transition, right? We all know that the world needs trillions and trillions of dollars every year to get from here to where we want to be in 2050. And I think the Commission's action plan also recognized that you need several billions and trillions of dollars every year. Why? Because it's simple. We need to transition from where we are today to where we want to be. So I think that's where we're starting from, as opposed to these are the activities that's viewed as green or that qualify as green today. So therefore, it would be better to invest in these fields. Of course, it would be nicer if you are already green, but the reality is the vast majority of the firms or activities are not necessarily green. So how do you provide incentive to get from here to where we want to be? And this mechanism of binary, whether green or not green, I thought would be maybe too blunt, maybe too simplistic in terms of approach. So the transition, as we all know, will be a long journey, right? It's not 1 year, it's not 6 months. It will be 20, 30 years of a journey. And we as a firm, we as a bank, is here to support that transition, right? So whatever the framework, whether it's EU, Japan, or US, will be implementing should support this, transition, and we finance that transition. I think is a very important facilitator that we would expect this framework to be. Lastly, just something that I read this. I read this taxonomy regulation, and also not everything, but the delegated act as well. And mitigation, by the way, and we had this discussion in Japan as well. Mitigation seems to be quite science-based. It makes a lot of sense. I mean, we don't necessarily agree with everything, but mitigation sounds quite, how should I say, reasonable in terms of why the list is there and why we want to invest more in these fields. But when you look at adaptation, we start scratching our head to some extent, right? Are they really science-based? Is it really a clear line between sustainable and non-sustainable? Would this allow greenwashing to be avoided? We weren't quite sure. I mean, for example, I love reading mystery books, and I normally start from the end, which is not the right thing to do. But when I was reading this adaptation list, the last column or last item was, I think, music and entertainment. I was like thinking, so what kind of music would be sustainable in adaptation to all this climate change? I have no idea. I mean, it's good to be ambitious. It's good to have all these activities included, but at some point you need to balance, right? Balance what's good for the economy, but also to make sure that there's no room for maneuver, room for greenwashing. So I think you need to balance. And all these questions, maybe just because we're quite away from Europe, we're just discussing this without directly engaging with the Commission, maybe because of COVID, we were not able to travel. So we're just scratching our heads thinking, so why is it here? Why is this law? What happens if we violate? So all these things, I think, ended up or allowed us to have a relatively neutral or slightly negative view about the taxonomy. So personally, as I said, I read pretty much everything in the taxonomy regulation. So I know the concept. I know how this will work, and I'm sure we'll discuss later what is the use case. But I think when you are not necessarily familiar with the EU, legislation process or the regulation versus directive, maybe many people just thought this is law, green versus brown. Brown sounds like illegal. This is not maybe not the friendly framework for transition. I hope that was helpful. Thank you.
Thank you, Tomo. And maybe last, because I think you've raised a number of points that I would like to come back to in a moment in the discussion. But before that, and certainly not last, Philippe, over to you. I know ADGM is investing heavily in sustainable finance, sustainable projects. Your legacy is maybe more on the fossil fuel side. So how are you looking at this as you're building a financial center in the Middle East? How relevant is sustainable finance And how much emphasis are you putting on this whole discussion around taxonomies at the moment?
Yeah, thank you, Nick, and good afternoon or good evening to all of you. Let me give you a few minutes of context, because I mean, what I heard is really interesting, and I'll come back to what, for instance, what Tomo said, and I must say I very much agree with what he said. But just a few words on the UAE. You know, the third largest oil producer in OPEC, the seventh in the world. We do have, however, an energy strategy 2050 to diversify the energy mix. In principle, by 2050, we'll have a 50% clean energy, i.e. 44% renewable, 6% nuclear. And at the same time, we have the largest solar plants in the world. I mean, don't want to list them, but they are really significant. So it's a kind of paradox, you know, oil and gas and sustainable finance solar plant. In fact, it's not a paradox, because the country has been trying to diversify away from oil and gas since the very beginning. And for the UAE, climate change, sustainable finance is really a strategic priority. That's clear, and you may have heard that countries would like to host the COP28 in 2023, and now they are thinking about getting the net zero target by 2050. So it's a big priority. ADGM, the International Financial Center of Abu Dhabi, well, we launched, and its regulator, we launched a project, I would say 2-3 years ago, covering regulation, cooperation, education, ecosystem, you know, the transactions. We have also set up what we call the Abu Dhabi Declaration to have all entities involved, more than 40 private and official sector entities. We also have been needing to gather all regulators. When I say all regulators, you have to know that the UAE is a quite complex country, because it's a federation of emirates, 7 emirates. So we have gathered all the regulators and the stock exchange to agree on a way forward in terms of regulatory framework. So, and to make short a long story, we have produced guiding principles, and these guiding principles are high level. They are basically, they cover, without surprise, governance, strategy, risk management, minimum eligibility requirements, kind of taxonomy, and the reporting and disclosure. This is to show that this is really now our DNA, you know, to push the sustainable finance agenda and to attract more private sector to invest in this new project. So that's where we are standing. Just to touch upon the question mentioned before, you know, the point mentioned before. Well, we looked at the EU taxonomy clearly, and we are monitoring it very carefully. I would say it's an intellectually very powerful system. I mean, it's very well thought. I mean, you have this double conditionality, well, to contribute to 6 objectives and not harm the other objectives. Well, that's clear. It's very good. But then, of course, the devil is in the implementation. How are you going to do that? And somehow, I would tend to say that the best is sometimes the enemy of the good. Just take the what I call the extraterritorial impact of all that. What does it mean? How does it work for a non-EU firm? Do they have to apply this? And this is very much Tomo's question. You know, it's a law, so you cannot be illegal somehow. But there is a major impact on what's being done outside the EU. And I have question on the data. There is a data gap. They have to be very granular, very forward-looking. We don't always have all this data. I may come back to that. I would say the other question is the photo, the snapshot against the movie. You know, the snapshot seems to be quite clear, but in fact, what is really important for us is a transition, particularly if you're an oil and gas based economy. How are you going to transit? The pathway is critical. Then what we are really interested by is the transition. How are you going to green the olive, not to say the brown, but the olive sector? How are you going to assess what is the pace of the transition? What is the journey to reach the net zero target? And last but not least, I would add, we are not very supportive of the blacklist. You know, you exclude or you keep on board, because the way the system works, you know, you have to look whether the sector or the activities within the taxonomy and they are excluded from the beginning. And in fact, if you coal, that's not a big problem for us. But if you look at oil and gas, I mean, the degree of technological innovation is huge. And in the coming years, things will improve and the transition will be very significant on this sector. And in fact, if you really want to reduce gas emission, this is what we all want to target, you have to deal with this big source of gas emission. If not, it doesn't make sense. So this is a kind of question we have in mind, but I'm happy to come back on other aspects like the international cooperation, which is key in my mind. Thank you.
Thank you very much, Philippe. I think what I would like to do is kind of, I've got two sets of questions, there are many more, but two broad sets of questions in mind for the ongoing discussion now. One is just a little bit more around the taxonomy, the issues of complexity and that it's an evolving animal and so on and so forth, and the challenges around that. I come back to that, and then move to the international dimension and how we contribute to international consistency, harmonization standards. But Tomo raised this, and so did Ingrid and others. And so I want to just drill in for a little moment longer and get your views on this whole question of the instrument of a taxonomy. Because, yes, it is very complex. Somebody earlier this morning said, you know, we can spend all our time counting the problem without doing anything about the problem. You know, the complexities of developing the capabilities to have all the data. And then it is, you know, it is work in progress. Therefore, Thomas' request for legal certainty doesn't really exist, because by definition, it's still, yesterday we described it as a house that's being built, but all we've seen is a chimney and the fire and the staircase. We haven't actually seen the blueprint yet. So we don't really know. We're on the journey, as you say, Tomo, but we don't quite know. And we know what the objective is, but we're not sure whether we're taking the right bus. And so I'd be interested to hear your views on that. And maybe starting with you, Ingrid, as you're looking at this, you know, I'm going to be very provocative here. Are we going down a route of incredible complexity? And you know, there are other tools like carbon pricing and so on that could maybe achieve these objectives as well. How do you see this? How do we create something that's scientific but still usable and thereby also usable globally?
Thanks, Nicholas. So I have the advantage of also having been a member of the high-level expert group on sustainable finance who proposed a taxonomy was needed. So I think it's just useful to go back to those discussions. So why was a taxonomy proposed? It was proposed for two reasons. One is that we heard from a lot of financial institutions that they wanted to do more on sustainability, but they didn't know what it was. So some kind of definition was going to be useful. Now, clearly we're, four years on from that now, and there's a huge growth in capacity, so that's less of an issue. But the other challenge was that we were facing 180 billion euro a year investment gap to meet our 2030 targets in Europe, or your 2030 targets in Europe. And there was a sense that for everything that was going on around sustainability and climate, we just weren't getting capital into the sectors that needed to be financed. And that's what the taxonomy does. It's actually an infrastructure taxonomy. It covers around 80% of the infrastructure-based emissions plus land-based emissions in the European economy. And it's a way of really getting, in particular, actually corporates thinking about their capital deployment plans, and then the financial institutions that provide capital thinking about whether that money is really going towards the assets that we need to see financed to close that investment gap. So it's just a completely different way of thinking about these issues, but arguably, I think, gives us a huge amount more transparency on what is or isn't going on in our ambition to finance the climate transition. Now, I don't think it can be used as the only way to assess progress. So we have to think about it in this information in the context of other more traditional KPIs that in particular asset management will use. So the things like the SASB and the GRI indicators, which will give you a sense of relative progress in companies in different industries in shifting their businesses into more sustainable business models, but also looking at things like strategy, risk management, have they got science-based targets? So it's got to be just one of a suite of tools that financial institutions use as they try to play the fullest role they can in this transition process. But it can't be the only piece of information we use. The other thing I'd say it's definitely going to be very useful for is if we start to use it to track public and private financial flows from the brown to the green economy. So I think it has its place, but it's not the only tool that we need to be using to work out how we deploy more capital into the low carbon space.
Maybe I can just have two small follow-up questions to this, which is, we spent most of our last days talking about the new traffic light system. So Tom made the point initially it was a very binary concept, super green or you were everything else. And then transition became such an important factor, obviously. And now we're moving to this amber category, and I think much more focus will be on the amber category. But the moment we come to transition, again, you will have different approaches to transition in different jurisdictions, in different markets. And super green can be more scientifically based. Yes, you've got politics on the fringes about nuclear and natural gas and so on, and I don't want to downplay that. But still, a more universal view can be found there. But once you go into transition, it becomes much more judgment-based, qualitative data than quantitative data. And when it comes to concepts like do no significant harm, it becomes very difficult to reach a common consensus across the world. How do you see those kind of concepts feeding into the international discussion?
Yeah, I mean, these are good points. So I do find it quite ironic that in some of these sort of complaints about the level of prescription in the taxonomy, that it's binary, that it's deep green, that the same people are then asking for olive, amber, and brown taxonomies. It's like, surely that is far more prescriptive and takes away the skill and judgment of an investor or a lender in trying to figure out what risk is actually attached, how well relatively are different companies positioned. So I think I'm sort of coming to the conclusion that actually we should just be providing a deep green taxonomy, clarity on what is in or out in our deep green future, and then let companies work towards that and their investors figure out, who's best positioned. I think the other piece around do no significant harm is really interesting. And it's here that I suspect we may see some divergence amongst different international taxonomies. So I understand the reason that these do no significant harm elements were added in was because biodiversity was coming up the agenda, social issues were coming up the agenda, particularly after the COVID pandemic and the economic fallout of that. And there was a sense that there was a need to future-proof the taxonomy. But as we've seen with the analyses of market alignment, something like the Green Bond Index has 15% taxonomy aligned activities in it. And then if you add do no significant harm in, it's probably nothing. So there may be some sort of leniency in terms of how different jurisdictions require compliance with those do no significant harm elements or not, because they're ultimately going to reflect, I think, national regulatory standards and stuff like that. And just one final piece, I think there is ongoing work at the moment to try to understand how these different taxonomies converge or diverge. And one analysis I saw between the EU and the China taxonomy showed an 80% convergence. And I expect we can expect to see this grow over time as consensus around pathways and the maturation of technologies that will be needed to contribute to our clean green future starts to happen, and everyone comes to the same kind of conclusions around what is in or out, but it will be a dynamic process until then. And I'd say for the well-informed investor, an opportunity.
Thank you, Ingrid. And maybe Eric, I pass over to you. Yesterday we learned that in Europe, maybe 4% of funds are taxonomy compliant, if at all. And it's not for lack of wanting, but for lack of data and facilitating the transition. I'd be interested to hear your views on that. And you offered a bit earlier, talk a bit more about the US side, because the approach in the US has always been based on materiality tests, the relevance, the materiality and relevance to the value of the underlying assets. So it's part of the normal risk management process at the moment, rather than being seen as a separate approach. And earlier today, I was a bit provocative and said, do we really need a significant harm taxonomy or brown taxonomy if everybody had a very good risk management framework in place? How is the US going about it, and how do you see the asset management industry responding to this challenge of transition as part of the taxonomy?
Well, thanks for the question. Let me focus on the first part of your question first, because I think there's listening to the conversations about the taxonomy, this figure about whether or not 4% of funds will be taxonomy compliant, I can't speak to the accuracy of that, but let's take it as true. And I think it reveals one of the challenges with the taxonomy. The taxonomy gives a false sense of security that there is a kind of an objective, science-based way of actually determining what is sustainable and what's not sustainable. And I think what we've already heard is the reality is, first, it's not entirely objective. Political considerations do come into there. I'm not saying that it's politicized, but it's some effect. But also, the taxonomy is not static. It needs to evolve over time, and I think the taxonomy authors openly acknowledge that fact. The third, as Tomo indicated, the taxonomy, though, has a particular status because it is embedded in European regulation. And that creates kind of compliance concerns for regulated entities that spend a lot of money trying to stay on the right side of regulation. And so the taxonomy then is presented to the public, whether it be to the investors, to the financial community, and more broadly, as being something which, if you get a good taxonomy alignment score, you therefore must be better than if you get a partially worse taxonomy score. It almost reminds me of the effect in the past decade with university rankings. Something that happens in the United States and elsewhere, where publications have started ranking universities, and they start saying, well, University of California, Berkeley happens to be slightly better than, Emory University in Georgia. And as a result, all these students run to Berkeley because they think they're getting a better education, when the reality is probably the universities are actually quite similar to each other, and the decision is much more nuanced. I fear that the false sense of security of the taxonomy and the desire for taxonomy alignment will create this effect where investors, not recognizing all of the complexities behind the development of taxonomy, will just automatically kind of go to whoever has the quote better score. In a way, we're simplifying the analysis, but not in a productive way. And that to me is the real danger with the use of the taxonomy. As Tomo indicated, it's not well communicated. The taxonomy may be more guidance, and it should be viewed in conjunction with other metrics, TCFD, SASB, GRI, and that is something that I hope that the policymakers and regulators would do a better job of. So that's a comment on the first part of your question. Now that does lead to the second part, and I'll be very quick, is I think that's one reason why taxonomy has not really picked up too much attention in the United States. And the focus has been on financial materiality. Now, there are legal reasons why that's the case. There is US Supreme Court law that talks about financial materiality. And so the US, being a rather legalistic society, has tended to start from that perspective in thinking about climate disclosure. But I think there's also a recognition that investors ultimately are looking at how climate issues will affect financial performance. And there's been a lot of effort to try to make that link. You should want to invest in a company that is taking steps to be more carbon neutral, because that company will naturally do better in a future economy where that's going to be a competitive advantage, that they're going to be able to succeed more effectively in that type of world. And I think where we get uncomfortable, I mean, when I say we, the kind of we as a society, is what you don't hear in that narrative is, well, invest in that company because we think, we're trying to save the planet, right? It almost seems like that we're ignoring kind of the social benefits. But I think in reality, there is a real link between financial materiality and I think the social objective of moving to a carbon neutral society.
Thank you, Eric. Do you want to say, I mean, to the extent that you can, just one last question. So how do you see potentially the US debate evolving over the next years? It's maybe a hard question, but just kind of your sense.
Well, I think first, to understand what's happening in the United States is the fact that the US, for better or for worse, always has checks and balances, meaning there's really no one really in charge. And so a lot of the work that I think people at this conference would focus on is the work of the Securities and Exchange Commission. But as we know, what the SEC is doing, which is primarily going to be focused on corporate disclosure initially, and they're talking about rulemaking by the end of this year, and then disclosure for fund managers, which we're talking about doing in mid-2022, is only going to be one piece of the puzzle. The White House obviously has a strong interest. John Kerry has been quite vocal about making commitments on climate. The EPA has a role. And I think it's going to be the classic case of that the US is this alphabet soup of agencies, that you are going to see a lot of different developments coming out of the US. And I guess, as coming from this side of the Atlantic, I apologize in advance for any confusion that's going to cause, but I think it's something that everyone has to recognize. So I would focus on the SEC developments, but as you can tell, the SEC is moving in a very different direction than what the European Commission has done.
Eric, you don't have to apologize about an alphabet soup coming from the US. We've got our own soup here, so we can mix the two nicely together. But it's interesting
there's convergence there then.
Yeah, no, that's true. But it's interesting that the US, I don't want to make this a debate about disclosure, but I do want to kind of, because in a way, it's all kind of different layers to the cake, so to speak. You've got the taxonomy, you've got kind of the disclosure piece, and then what do you make of it? And Philippe, when we spoke, in you're thinking also potentially of going more down the disclosure route than the complex taxonomy route. And so maybe I just bring you in on this and what you've just heard from Eric.
Yes, I agree with Eric. Well, to be clear, we are not criticizing taxonomy as such, as a concept. As Ingrid said before, it provides some kind of certainty. But as of today, while the taxonomy debate has not stabilized, it's ongoing. I heard that there are 200 taxonomies under development in the world. So we said, okay, let's not add one more to get 201. we're not going to go to that direction. Although we monitor. Well, as I said, we focus on disclosure, so very much looking at what the SEC is doing. But on taxonomy, as we still have this question, pending. We're not going to have a law as such, and adopt the EU taxonomy. So we have the big issue of recognition, or equivalent somehow, because I mean the world is there is no boundary to climate change, or and I was looking at the numbers in terms of asset management. While Europe, well, without the UK, is 20% globally. The US is 50%, and so I mean we have to rebalance things. Are we going to be directed by the EU on taxonomy and all that stuff? I mean, we have to find a way to be more consistent, to reconcile the approach, and we need to have a kind of recognition, equivalence. I don't know how to call that. This is a way forward. If not, we'll go to fragmentation. And the other concern we have, I think it's Eric who said that rightly, taxonomy indirectly, if it's acting as a law, it may drive investments, No, I'm not talking about the brown or the black, but the amber. And there is a risk for investors to simplify and just to take the green. We're not going to set up solar plants everywhere in the world. I mean, so we have to rebalance things. So this is our concern. And as I said before, we are focusing now on disclosure because it's a way forward, and it's a lever, to push things forward for the firms. And I think the way forward for us. Thank you.
Thank you, Philippe. I think, Jarek, it's interesting to hear this. So So first of all, I agree with everybody about the taxonomy. At a minimum, I think, Ingrid, we described it 4 years ago as a common lexicon, so that people know what they're talking about, that we've at least got a common language. And then you can decide what you do with that language to some extent and how you apply it. But yeah, coming to the, let's assume we have a taxonomy that is incrementally over time converging globally. The Chinese-European example is a good one. I'd heard that it was even 95%, and that's really just clean coal and nuclear, which are the two main fundamental issues. But in any case, let's say the taxonomy itself, the scientific part, is more or less stable, even though there's a bit of politics around it. But then it comes to the level of ambition of each of the jurisdictions. And we heard from Ingrid, the UK has higher levels of ambition, higher screening thresholds. Well, if you're a global company, how do you go about this? If you invest, and more importantly, have investors from all over the world, either you segment your investment across different jurisdictions to attract the European investment community, US investment community, Japanese. That's not realistic. My experience from the last 30 years is you level up. You take basically the best from everything to have one kind of standard for your own risk management, your own disclosure, because you can't have multiple different systems. How will companies, how does Nomura potentially deal with this, and how will members of the GFMA deal with this complexity of all these different demands and different levels of standards and different or levels of ambition in different parts of the world?
I think looking at the role of taxonomy, it's especially in climate finance, it's apart from trying to catch out the greenwashing, it's to enable financing, so to provide guidelines to investors as well as issuers or recipients of the investments, and how climate aligned you can assess and how climate aligned a given corporate is at entity level. So my fear is, and we heard mention of these 200 or so taxonomies being worked on, that without common definitions and certain minimum alignment, at least, for example, on what kind of metrics we use for a given environmental factor to report, the whole thing will not be enabling finance. We've discussed fragmentation, because it's one thing if you're a global investor and you're working with divergent thresholds and transition pathways. If I look at something in, let's say, the Nordics versus in say Indonesia or across sectors, but it's something completely different if I'm in the given sector. I have different definitions, diverging metrics, even reporting on the same, I don't know, let's say CO2 greenhouse gas emission, something that's very quantifiable, scientific, and there's more than 100 different metrics reporting on this. Then we obviously lose any comparability, and it does make the whole thing inoperable. But personally, and not speaking on behalf of GFMA, I think what's going to happen is, let's say you have a corporate from, let's say, from Abu Dhabi wanting to access the European market, issue that in euros. They will effectively have two methods: either try to structure something EU taxonomy compliant, despite they are not forced. This is a voluntary standard. There's nothing forcing them. And by doing so, they will in my view, attract incremental demand. They will get the ESG-driven investors, and in particular those who want to run Article 8, Article 9 funds, and want to build up their holdings of EU green bond standard, EU taxonomy compliant bonds. Or they can simply say, we are not an EU entity. We will issue a green bond which is ICMA compliant. We're not looking at not showing taxonomy alignment, and that will be perfectly permissible, legal. But I believe that will simply, either if there's a green attract, it will price on the more expensive side. It will attract less demand than versus doing in the green bond standard. So personally, I don't expect suddenly the whole market either moving to taxonomy compliant issuance or non-tax or not doing green bonds at all. I think we're going to have conventional bonds, and we're going to have this level of green bonds which are non-taxonomy compliant, and then additionally for those that are able and willing to meet those thresholds and do the extra legwork, will attract the addition. So but that's my personal view, how I see this shaping. So I think it is important to highlight that nobody is, at least from a legal perspective, we are talking about regulation versus directive versus US approach. No one is forcing you to be doing purely taxonomy compliant, or you're shut down. Of course, we're going to see likely divergence if you are able to do something. And we often get from our Japan-based clients a lot of questions and concerns, who are frequent green issuers. They're asking, well, what will happen? Does it mean if they want to access the European investor base, whether they have to amend their programs and everything has to be EU compliant? And so despite it's not a law in the sense that it forces you to mandatorily abide by it, I think it will be also a function of the buy side demand, the pull side of the equation, how much of a preference they will put on something that is taxonomy compliant versus a normal green bond meeting, let's say, looser criteria, but still being compliant with other standards.
Can I ask you a small follow-up question, Jarek? And by the way, to the audience, just to remind you, there is a Q&A function. I hadn't explicitly mentioned it at the beginning of this session, but it's kind of there in the background. Please do ask any questions. But one follow-up, Jarek, which is, if we've got all these multiple taxonomies, you're right, we will see different types of product, some taxonomy compliant, some not, whatever. But what you often see is that then the industry, in a way, culminates around certain standards itself. To have a certain level of trust, you don't pick and choose. Ultimately, the industry, we saw it with the green bond standards and the ICMA standards, you will see certain type of solutions emerge in the market. Mm-hmm. Would you anticipate something like that, a kind of a market-driven move towards selecting certain taxonomies or certain practices over others?
Yeah, I think obviously the EU is doing a lot of work, and I'm sure it was mentioned on the other panels with the International Platform on Sustainable Finance, trying to somewhat export the concept to other parts of the world, and in, ensure either minimal level of harmonization, but I think it's too early yet to see, and I think it is a function of the leadership of the EU, that they're obviously trying to retain this leadership, and there's pushback from other economies. I'm hoping that this will be a race to the top, and with the change of administration in the US, and I hope also in China with the changes to their green bond standard, to the amendments to their taxonomy, that this will be, if it is a rivalry, it will not be, which I think it's more and more clear that this will not be a rivalry to the race to the bottom, which 2 or 3 years ago, there was worry that if there's multiple taxonomies, people will be choosing the one which is the most loose, and there'll be arbitraging. I don't think we're going to see that. I don't think you're going to, and it's hard for me also to imagine in practice someone saying, okay, I'm an EU-based issuer and I'm going to structure something, I don't know, compliant with, let's say, Malaysian taxonomy or somewhere else throughout the globe. So, and I think already listening to what Ingrid was saying, it seems it is the race to the top, that the UK is announcing that with their taxonomy, they will try to be one step ahead of what the European Union is putting in place. So I think empirically we are seeing this emerge.
Thank you. I think, Tomo, I'm not sure, but happy for you, obviously, to respond to anything you've heard, but I think one of the concerns I detect from Turkey and other jurisdictions outside the EU is not what the taxonomy is for at the moment, because yes, it's non-binding now and applies to investments and to some extent to those that are marketed as green, so now it's getting a bit broader. But it's that incremental further use. So the European Investment Bank said it will use it once it's in place. We had a debate earlier about it extending to public funding. Yesterday, they were pleased to extend it to lending activities more broadly. So maybe comment on that a little bit, but also just in general on what you've heard.
Sure. Thank you. So maybe let me step back a little bit and try to frame this debate. So the way I look at this EU framework, first of all, is this: number one, this 2018, the Sustainable Finance Action Plan. I think that was very comprehensive, very thought through, well created plan. And you've got 3 pillars, right? There's mobilizing capital, risk management, disclosure. Makes sense. I think you need those 3 aspects, not just one. However, I think what's important, and this relates to the point Eric raised, this false sense of security. I think that's very important, because at the end of the day, mobilizing capital, risk management, disclosure, they need to be aligned. They need to be, we're not talking about 3 different engines, right? They need to be somewhere connected within our organization. Disclosure is about what we do, right? It's like a health check, right? You don't do something just because you want to show something great, when you do the health check. It's everything you do, and the outcome or the result will be published as a disclosure. So disclosure shouldn't be just for the purpose of disclosure, here's what we're going to do. This has to reflect what you actually do in terms of lending, and also what you do as a risk management. So there's a discussion, and I know the EBA, ECB put out this as well as part of SREP. They will look at this ESG factor. Of course, climate change will be one of them, and taxonomy may be part of that discussion. So when I read about this taxonomy potentially being used for risk management, maybe for capital, I think at some point this becomes dangerous, because again, maybe that will send wrong sense of security. Because at the end of the day, sustainable or green doesn't mean low risk, right? Maybe if you think about 30, 40, 50 years from now, sustainable may prove to be less risky, right? Yes. But who knows if a new technology, if a company, venture fund or capital want to invest in something very new, it's good if it's an equity investment. But from our perspective as a bank, as a lender, you don't want to take such a risk, right? But if somebody tells you, oh, this is taxonomy compliant, maybe you'll think that it means safer, it means less risk. And so that will send you wrong, false sense of security. And also to the point about disclosure. So I saw this proposal from I think it was the EBA around green asset ratio for the purpose of Pillar 3, and also for the purpose of taxonomy, Article 8 regulation. I mean, comparable metrics is useful. It's easy to calculate, easy to compare, but maybe again, that will send a wrong signal, because if you have two banks with high green asset ratio, low green asset ratio, which would you pick? You know, maybe people will start saying, I want higher, ratio bank to be included in this fund, not low one. But what does that mean, right? If I were told that, hey, you need to somehow get to, I don't know, 80% of green asset ratio, I mean, in theory, you can do it by simply divesting all the loans that are considered brown, and all of a sudden you start buying all the green loans or assets. So, I mean, at the end of the day, number is just numbers. But as I said, disclosure or KPI needs to reflect what you actually do or you want to do, not necessarily, you're doing or you're changing strategy for the purpose of hitting certain number or hitting certain KPI. So as I said, capital, mobilizing capital, risk management, disclosure, they all need to be aligned. We should use the same tool and with the same incentive, as opposed to think about doing something else just for the purpose of disclosure. So Pillar 3, if you think back where this came from, this was about discipline to the management, right? That's a Basel principle of Pillar 3. So capital, liquidity, higher the better. I get it. But when it comes to something different like green asset ratio, it's good for maybe it's good for the comparability purposes, but is it really the right KPI for Pillar 3 for the market to give discipline to the management? I'm not quite sure. So I respect the EU's thinking, and I'm sure there will be a discussion around this from the EBA report. But personally, when I was told this is a part of Pillar 3, I was again scratching my head whether this is really a good idea for the purpose of Pillar 3 requirement. Thank you.
Thank you, Tom. And I still remember the investments in Europe, in Germany in particular, in solar panels, and that is certainly not an example of good risk management, as it turned out afterwards. But maybe we're coming towards the end of the discussion. Maybe I can ask each of you the same question, starting with you, Tomo, which is, we didn't have enough time to really talk about harmonization, standardization, or how to go about it, given the environment that we've mapped out over the last hour or so. If there was one or two things that you think at the international level should be done to contribute to convergence, let's say predictability and stability around this whole framework, what would those be? Maybe starting with you, Tomo. 2 recommendations to the Commission or decision makers.
Sure. So I know it's not easy, but I'm going to tell you. So number one, I think all this discussion ought to be science-based. So let's not get the political interference. This ought to be purely science-based and purely about 2050 net zero, as opposed to what you want to do today or tomorrow or keep your job. I mean, it's important, but once you start thinking about all these, issue of today, it will get messy. And Nick, you touched on this already within the EU. So when it comes to global harmonization, that's not going to happen. So that's number one. Number two, what I think we need to focus is more about alignment with this longer term pathway to net zero, as opposed to whether it's green today, green tomorrow. That I think is too short-sighted. So while it's important to look at the technology today, somebody said it has to be future-proof. So I think we need to have a longer-term view. And at the end of the day, what we want to hit is Paris Agreement net neutrality 2050. So let's think about next 30 years, not 3 months or 3 years. And taxonomy should allow that longer-term investment to happen. Thank you.
Maybe the same to you, Eric.
It's a hard question. I mean, I think really two things really quickly. First is focus on the disclosure part rather than the taxonomy part. I think that's definitely going to make it easier for there to be convergence with the United States. But to the extent the taxonomy exists, it's an important project, is create a framework that is open, a bit like software. Invite participation by experts outside of Europe. Invite international firms to engage with the development taxonomy. Make clear that the taxonomy is not a finished product, and create a system that allows evolution of the taxonomy. This would make it possible not only for taxonomies to link up with one another, but also ideally would make it easier for international firms to comply with the taxonomy and all the regulations that are going to be embedding the taxonomy.
I think that's a really good point that we discussed with the Commission some time ago when the platform was being created, and they will make announcements around the reform of the governance of the platform. I hope they will listen to your point to bring experts in that don't necessarily have a European passport, to just bring those discussions closer together. Philippe, maybe over to you.
Yes, clearly, I think there is a risk of segmentation and even fragmentation from, well, I heard Jarek was relatively positive, but I mean, well, the market-driven solution, it may lead to some kind of silos, and which is, I think, problematic. So there is a need for more international cooperation. There is a need for convergence, coordination. So maybe also be more aligned on the medium to long term, be less focused on criteria and more on outcomes. So hopefully this international platform can help. I would add that as we talked about disclosure, clearly, we also have to take into account the IOSCO work streams and what they're doing with the IFRS Foundation. We have to reconcile all these approach. I mean, reconcile this very sophisticated EU approach with the IOSCO global outreach and with the US approach, where we have to sit at the same table. If not, it will never work, and be more led by principle than very detailed criteria. That would be my takeaway. Thanks.
Thank you. And I think I should mention that you had been the Secretary General of IOSCO, but I think the importance of the international organizations and bringing people together is a really, really important point. And I don't know, Eric, when we started talking about outcomes-based cooperation or equivalence rather than the rule-based one, we seem to be coming back to that every few years in a different subject matter. Jarek, over to you.
Yeah, so I definitely concur with my Japanese colleague Ishikawa-san on the process being less politicized and more science-based. That I think would definitely help all. With Philip, I agree also, and I think we'll be seeing much more standardization among the various international standard setters. Looking at we're big fans of the work of whether it's SASB or whether all the initiatives from now coming to the fore from IFRS. And I would add that I would like to see more focus on transition finance, and maybe in my Nomura hat on and looking at Asia, and also looking that focusing on the deep green is simply not going to get us anywhere near the Paris Agreement goals. It's we need to target the hard to abate industries, and that's where the big delta in emission reductions will be hard earned, and I appreciate that's even harder to define what is transitioning, what level, at what pace, etc. And I think we can have a completely separate panel. And one last thing I would like to see more emerge. It's great we're seeing all these net zero targets, but I would like to see a bit more, apart from just a communication that every second company is now going to achieve 2050 net zero, a bit more on medium and or intermediate steps, what they're going to do by 2025, 2030, 2035, some kind of key milestones. And because again, I think we're not going to get there if we're just going to, for 20 years, not much happening, and then suddenly.
But I do want to give Ingrid the last word. Last one's maybe always the hardest. But over to you. Just one point. What we saw data is from our previous discussions, €1 invested in India will have 3 times the emissions impact than it would, for example, in the EU, according to data. But Ingrid, last word over to you.
So I think I've got 2 points. One is there will always be politics. I think convergence will come over time, but probably will need forbearance around the application of the do no significant harm criteria, and the international platform is the place for that to happen. And then my second point is, do use it in market oversight. I think there's a role for a brown taxonomy in informing capital requirements, reflecting the risk from climate change. And my other observation is that if you were to have Pillar 3 climate-related disclosures, I think that would move some of the conversations that are blocked inside some of the banks, in particular around green product development and use of own capital to underpin the risk there. I think we'd start to see some of that move.
I think we will have a separate conversation on that, a separate event on that. But with that, I thank the panel, because I'm very conscious of time. We could have run for hours on this one. I think it's fascinating. Thanks for all of your time and for bringing the different perspectives from different parts of the world to the table.